Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im Zuhörermodus.
Sunny good morning, dear participants, dear ladies and gentlemen, and a warm welcome from Bonn. As you see, we have quite a lot of sunshine for me and my colleague Roland Brooks. I hope so is likewise for Jegor in London and Lukas Hammerl in Dortmund, and also wherever you are to join us for today's webinar. My name is Michael Bommer. I'm heading the ESG activities of BAI, of the Bundesverband Alternative Investments, and I'm quite happy to moderate this webinar and to guide you through our topic today, which is the ESG template 2.0, so our third ESG template that we have elaborated together with our member companies and institutional investors. Just to say some words at the beginning, some technical information. You will get recording the slides afterwards, and if ever you have any questions also in between, you might put them in the question tool in this GoToWebinar tool. I will put also this information in the chat, and you can find every information there also. What we are presenting you today is besides the monitoring of all the ESG regulation that an association like BAI has to do for its member, and the participation in consultations and so on, typical for what we do to help our members, the industry, and their investors in ESG-related matters. So what you can see here is a bit of summary of all our activities, what we do. As a nucleus, you have our BAI working group on sustainable finance and ESG, with some many subgroups depending on the topic and the aim we have we want to achieve. So we have sub-working groups for some regulations like SFTR and CSRD, but also for the EET, also for this ESG template that we have developed, also for best practices, for position papers, for policy papers, and so on. If you are interested in our work, which is always focused on private markets and on ESG matters, so in this sweet spot, private markets and sustainability, so you should follow us with our events and with our publications and research. Just to mention the next few events in this autumn, we have our Innovations Day, we have our Real Assets and Wealth Management Symposium in November, also with some ESG-related topics, and we have our traditional workshop on sustainable finance and ESG at the end of November, with also the broad range of topics that are important for our member companies and their investors. If you go to the next slide, you can also see some publications, and only the recent ones we have published on our website. So the two ones with a yellow star are the ESG related ones. So for instance, we have written a policy paper on how to get some kind of recognition by policymakers and by supervisory authorities regarding impact investing, and there's the same framework. We have also written a position paper, infrastructure and impact investing in May, for instance. All these publications you might find on our website. You have here the QR code to download it, and you will always get it for free. Having said that, I like to present you our today's speakers. So probably it's not unnecessary, but it's some kind of politeness to present you also Jegor Tokarevich, CEO of Substance Over Form, a typical service provider within our member companies. So they offer risk management and reporting for alternatives and regulated institutional investors. He's very active in our sub-working groups on investor regulation, and also the ET working group, which has developed this template we're talking about today. He's also head and initiator of professional development programs for alternatives and private markets, for instance, at the University of Oldenburg, where he offers a CAS study program for professionals. And I'm more than happy to welcome also Lukas Hammerl, who is working in the Investment Risk Management Department at VOLKSWOHLBUND Lebensversicherung AG. If we would translate VOLKSWOHLBUND Lebensversicherung in English, it would be something like the public welfare insurance company. So a typical German LP, and he's doing on his job exactly what we're talking about today. So it's responsible for all sustainability related aspects at the investment level, including ESG considerations, and also, and this is what is very important today, for regulatory sustainability reporting. Well, having said all that, I'm happy to hand over to Jegor, and feel free, the screen and the mic are yours. Thank you.
Yes, thanks very much, Michael, and for the organization, to you and to BAI, and hello everyone, and a very warm welcome to our webinar today. We heard about the ESG backlash, I guess, since our last webinar last year, but the amount of people who joined actually provide evidence that at least in the regulatory space, there still seems to be some interest, which is I guess is great for us for this webinar. And today what we'll discuss is a couple of things. So we'll give an update first about the regulations, and maybe I think somebody is not muted. I'm not sure who it is. Maybe Roland. Because I hear some background noise. Okay, thanks. So as a brief intro, so what we'd like to do is we'd like to give you an update. Michael said this at the beginning. That it's the third year in a row now where there is a major change and a major update of the template, and next year there will be another change probably and another update of the template. So the only constant thing here in ESG regulations is actually change. Unfortunately, I would think, because things are very dynamic here. So that's why I would like to spend time first to discuss those changes at the beginning. Then I'm very excited to hear from Lukas about what it actually means in practice for a German insurance LP. And then in the last session, in the last part, we'll explain what actually you can do as a GP to satisfy those requirements based on the BAI template, which we adjusted now. So that in a nutshell what it is. We're very happy to take any questions, so just write them in the chat. Michael will have an eye on those on those questions and ask them in between, I guess, right, Michael? So we can always do it in an interactive manner. Right, so let's have a look. As a warm-up, you may recall this is a slide from our previous webinar, almost 1 year old. So typically, if you have a EU LP, they will typically request two things on an annual basis. One is the BAI ESG template we'll discuss today. Why do they need this? Because they have to provide certain taxonomy and CSRD ESRS disclosures. So it's essentially taxonomy KPIs and in this case GHG emissions disclosures. Then it's the EET. Now is the fourth year of the EET, where they typically will require PAI, so principal adverse impact KPIs, because they need to disclose them as well in annual PAI statements. But also some other information like, again, taxonomy ratios, and so on. What has changed compared to the last year? And again, this is exactly how we started last year. So what has changed is the following. This has changed, so CSRD ESRS is being amended now. There's also a draft for the change here. And as a consequence, there will be a change of our template to 2.0. And we'll explain to you in this webinar what it will entail. And on top of that, what has or will probably change this year are also the timelines. So typically, an regulated EU LP will ask you for provision of those templates between end of October this year and mid-February next year. Last year it was a bit different because it kind of started last minute, but this year, since German LPs specifically expect that it will be part of the annual report on audit, they start requesting it earlier, also that they have more time to process it. So you may ask, okay, how is it possible to provide 2025 data if 2025 is not over yet? There are still 2 months of 2025. And the answer is, in general, you should provide the latest available information. So, for instance, if they say you need to provide end of October, you could maybe even provide a 24 report based on 24 data, if this is the latest available you have. But if, of course, you also have 30th of June maybe this year, or even 30th of September if you're really fast, then obviously it would be better. I think in general, a big a thing to notice is that delivering on time is much more important than delivering everything but too late, because if you deliver too late, then it can't be used. If you deliver what you have but on time, it still can be used. So essentially make sure that those delivery deadlines are considered, because they're of critical importance for the processes of LPs. The EET, on a positive note, hasn't changed to our knowledge. So EET 1.13 was used last year and will be used this year. Also, the PAIs haven't changed. There were minor changes in some Q&As, but the majority is the same as last year, which actually is quite nice, because we see that since EETs and PAIs and so on haven't changed too much, we recently had also it was recently confirmed by the ESA, so by the European supervisory authorities, that the quality of PAI disclosures increased over time. And that's also what we saw in our research based on around 1,000 illiquid funds, that indeed more PAIs are disclosed and better quality and so on. So you see, since this hasn't changed much, the industry started getting adjusted to this. So if you already provide EETs, keep providing this in a good quality, in a better quality with more PAIs. If you don't provide, probably you may think about providing it, because based on our understanding, more than 60% of illiquid funds typically do provide, so it can be considered to be as a market standard. So that in a nutshell regarding reporting requirements and what will change. So now, as a quick real life maybe example, so what do investors do with this? So the good thing about disclosures, so there are many bad things, but the good things about disclosures is now you can find everything on the internet. So here I just Googled, and you can find those disclosures as well by just following those links. So here we have, for example, Annex 10 disclosures, taxonomy Annex 10 disclosures of 2 large insurance groups. And you see they disclose here, for instance, their taxonomy alignment ratio based on ratios based on turnover and capex. And one group discloses between 2.1 and 2.3. Another one discloses between 4.1 and 4.75. So now you could, for example, compare them and ask, why is it the case? And then you have more information here, so you can also see that the balance sheet structures are different. For example, this one invests in only to 10% in financial undertakings, but this one has over 46, and so on. So you have a whole bunch of information here related to taxonomy. And this Annex 10 is the core taxonomy disclosure annex. This is where we now have a suggestion that this should be or may be changed for this year's reporting, also including the methodologies, how to calculate things. Another thing you can see is Annex 12. So this is also part of this taxonomy disclosure. And here again, the same to insurance groups, what they disclose. So for example, this one discloses that they have 0 or no nuclear or gas activities. So that's pretty much the taxonomy nuclear and gas disclosure. But the other group, for instance, they have nuclear gas activities, so they also show the numbers here. And you can see here, for instance, out of all taxonomy aligned activities, so they had, I think, 2 point something. So out of those 2.1, 2.3% of taxonomy alignment, thereof, a small percentage is based on nuclear and gas activities, for instance. This Annex 12 was a horror for many insurance LPs, because it was at least 3 times longer than the actual taxonomy annex, and was very tedious and very annoying. And the results that you could see there were either no or very, very small numbers, which were not really of interest, I would say. So now the idea is actually to drop this annex, which I think is actually a really good step forward, because this annex was more work than any kind of benefit imagine. So here is at least some good news that this might be dropped and not required anymore, which would be great. What else do LPs disclose? They also disclose under CSRD, or in the past also under NFRD and ESRS. And what do they disclose? They disclose financed emissions. So essentially, they need to disclose GHG emissions. And you can see here, there is a table, and one part of the table is investments. So in investments, they need to disclose total Scope 3 GHG emissions coming from investments they're invested into. So they have to present absolute numbers, location, but also market-based, and typically split by asset class, whereby the PCAF categorization often is used. Yeah, so here those 48 here were split by PCAF asset classes, and the same you can find here on the other side. And that is essentially the reason why we have this webinar, because investors, they need data to make those disclosures. And in the past, we used the BAI ESG template for this, and for this year, the same is expected to be done. So now, this was 2024. So what will change in 2025? In 2025, or end of 2024 and beginning of 2025, the EU simplification revolution was proclaimed by the EU, whereby the idea of this simplification revolution basically was to make less company report less things later. So basically, they want to reduce the scope of companies, reduce the scope of data points, and also postpone certain obligations. So basically, trying to reduce the regulatory burden as much as possible. So that sounded quite nice, but then, for instance, we published here an article from the insurance, but also from the banking perspective, that those suggested taxonomy simplifications, in parts there were simplifications, but in other parts they were not really simplifying anything. So the question is, are those, let's say, broad simplification suggestions really helping EU LPs, because they're a very specific subgroup of all companies in scope, or not? And that is exactly what we're going to look into now. So as you can see here, actually part of the simplification revolution was technically transposed in so-called omnibus directives and initiatives. There are, I think, 5 omnibuses. So for us, Omnibus 1 is the most important bus on this road trip. And here you can see in this AI-generated picture, we have a whole bunch of EU LPs in the omnibus who are excited about the simplification revolution. You see the sun is shining, the grass is green, we see a lot of smiles. And then the omnibus started releasing directives. So the first one was the so-called stop the clock. You may have heard of it. Basically, it was suggesting to postpone the implementation for so-called wave 2 and 3 companies. So it would mean certain companies would basically have to start disclosing at a later stage than, for example, in 2025. The problem here is that many big LPs, they are already wave 1 companies, so this year wouldn't apply to them, because they wouldn't be covered by the stop the clock directive in many cases. Actually, it even creates a problem, because they were hoping that now they get data finally from their portfolio companies, but now those portfolio companies, which typically would be wave 2 and 3 companies, they have to disclose data. So again, LPs need to disclose, but then they now will get not the data they maybe were expecting to get. So actually, for a EU LP, that's not really a simplification. It's more of a problem, let's say, because they get less data but still have to disclose the same. Another one, which is not final yet, is the Omnibus 1 content proposal. So the content they suggest to change is one, the scope. So the scope of companies that will fall under the regulation. And one significant change is that they want to increase the scope of employees of the companies that should fall from 250 to 1,000. But again, among some other changes, but again, here many LPs, many large EU LPs are typically still in scope, because they would also surpass the large or the new criteria here as well. Another change which is suggested is simplified ESRS. So ESRS is a gigantic technical standard, and there they want to simplify it, which I guess is quite nice for EU LPs. The problem for us here in this kind of narrow circle is that the scope 3 emissions and all the information required and tables still requires the same. So essentially, there is no change for us with regard to this simplified ESRS, because as a GP, you still would have to provide exactly the same data as last year. So we see simplification revolution sounds good, but if we break it down to the actual large institutional EU LP, it might be so far not very significant, at least with regard to our topic here, with regard to reporting of alternative investments. Another part of this simplification idea was to change the taxonomy regulation, and now there is a draft which is expected to be published, hopefully, if it passes the Parliament and the Council in Q4 25, which would mean that the taxonomy regulation will then will then apply basically for the 2025 reporting year. So it will be applicable for what we are doing today. What will change? Annex 10 will be amended. It's what I mentioned. It might look nicer, but especially the methodology will change. So for a company who set everything up last year, they may have to change all their IT systems, calculations, and so on, and basically would start from scratch, which might be considered a bit of an extra annoying setup, because they just finished something last year, and now they have to kind of redo everything here. So not sure if this is really very beneficial. What is beneficial is definitely Annex 12, that this will be removed, because this was, as I said, quite annoying, and if this is removed, it's going to be great. Still the caveat here for the Annex 10, even if it's amended, it's not just that the kind of fields will be amended, but the whole methodology will be amended. There will be different calculations, methodologies, and also, funnily enough, the reports will look differently, because the denominator will be changed. Taxonomy ratios will look higher. So it's important to mention they will look higher, but they will not be higher, because it's just the methodology changes. So you'll basically report the same in a different way, because obviously if the denominator changes, the value increases, which doesn't necessarily mean that the actual taxonomy content, let's say, increases. So keep an eye on this. On those, let's say, content and methodology changes. And in addition to that, now we also have, the LP has different options how to deal with the taxonomy disclosures in 25. And you can see here, so this is the LP, the prince in our picture, and the prince wants to get to the princess in the EU taxonomy castle, and now has basically 3 ways to get there. So one would be the opt-out, which means they could basically completely stop disclosing taxonomy for 2 years, for financial years 25-26. Also here, this sounds nice in the first instance, but the problem here is many of, especially life insurance companies, they disclose taxonomy ratios under SFDR because they have certain products where they also have taxonomy ratios. So for them, opt-out probably is not really an option from what we've heard so far, because they still want to disclose taxonomy. But for some, it will be, especially for those who don't want to disclose any taxonomy. This could be a nice relief for 2 years. Then they still have the option to use the old template. So the old Annex 10 and 12 I showed you before, they can still use. And then from the following years, so from 26, they can start using the new one, or they can immediately start using the new one. And the interesting part of this now, as a GP, you'll have basically 4 different types of LPs. Those who don't need anything, that's an easy one, because then you don't need to send them anything. You'll have those who opt out in taxonomy, but they need CSRD. So then you can send them GHG emissions and ignore the taxonomy. But then you'll also have those who will use the old format and those who will use the new format. So that's a bit of a mess. And here we had a bit of a thought in our working group how to deal with this, because we now basically have 2 completely different formats. So will the GPs need to disclose 2 different templates, do they only disclose one? So what is the idea here? So we'll show you. I think we came up with a pragmatic solution for the interim year, and our feeling so far is majority will do this year, so they'll still use the old template because the time is just too short to implement the new one, and the new one is significant. But we also know some who will do the new one. Yeah, so this is the interim phase in the simplification, and this is so far the theory from my end. And now, Lukas, if I may ask you maybe to present your view on this, because now I spoke for quite a long time about the theory. Obviously, it will be very exciting to hear about the practice. And maybe before we move on, Michael, a question to you. Is there any kind of questions or remarks, or shall we just move on?
You can move on, because there is only some technical questions, not detailed ones. Thank you.
Great. Lukas, then excited to hear from you.
All right. Thank you, Jegor. Also from me, a warm welcome. And yeah, welcome to the next part of this webinar, where I will give you some practical insights from the perspective of a German insurance company. So yeah, it will, just wait a minute. Can I? Yeah, who's gonna put on the next slide? Do I do it, or?
Yeah,
I think below on the left-hand side.
Okay, all right, then I will do it. Perfect, fine. Okay, sorry. But first off, okay, so yeah, who are we? And yeah, let me just give you a quick overview. So we are a German insurance group active in the areas of life and non-life insurance. The assets under management count to roughly 21.5 billion euros, and the alternative investments account more than 20%, with the asset classes covering private equity, private debt, real estate, as well as infrastructure. And the fund structure are mostly single funds or fund of funds. And last but not least, I want to give you a quick hint. The number of employees we have right now is between 500 to 1,000. So yeah, I will touch back on that later, but for now, let's just go to the next one. All right, and I would like to start with, I call it the 3 pillars of the ESG-related investment reporting obligations that we have as an EU-regulated insurance company. So first off, we got the SFDR, where we have the PI statement and also the product-related disclosures, the pre-contractual and periodical reports. We then have the EU taxonomy, where we report the taxonomy eligibility and the taxonomy alignment. And also we have the NFRD, or the CSRD, as you can call it, which covers the financed emissions, as Jegor already pointed out. And where do we get the data from, especially for our, especially for our alternatives? On the one hand, we have the European ESG template, the EET, and also we have the BAI ESG template. And with all the regulatory changes that we have right now, it's maybe time for template 2.0. But before I get back to the template 2.0, and we will hear about that later as well from Jegor, I just quickly want to give you an insight into our strategic approach on how we, in regards to stop the clock or omnibus. So as of now, we have a CSRD reporting for the financial year 24, and we did that on a voluntary basis because right now there is there's a missing incorporation into the German national law. So what do we have right now? We have a German government draft of the CSRD implementation bill that got recently approved, but still yet the incorporation is outstanding. So what does it mean exactly? In this government draft, you can see that there is no obligation for CSRD reporting for companies with 500 to 1,000 employees. And this also includes the CSRD reporting that we have right now. So I call it the CSRD 1.0. You can see that as well on the right-hand side. It's like 1,000 employees. That's like the new threshold, the critical threshold on the employee number size. And we as Volksverbund, are under this critical threshold, so there's no obligation for us anymore. And what we decided was that we want to keep the CSRD reporting nonetheless. Why, you may ask? Well, we have many resources that have been already invested in order to comply with the CSRD reporting standard. And also, there is a probability that we can reach the 1,000 employees in the future and then fall under the next CSRD. So the employee number of 1,000, it's like not in the near future, but we just keep an eye on it and we monitor it closely. And just to make sure, and because we already invested so many resources, we decided to keep the CSRD reporting. So that's the CSRD side. Let me give you a quick look to on the EU taxonomy. As Jegor already pointed out, there are different options that we have as an LP. For us, there are 3 options. Let me start here on the left-hand side. We can use the old template for the financial year 2025, and afterwards get the new template with the financial year 2026. We as well could use the new template from now on, or also we can opt out. All right, and if we look at the opt-out option on the right-hand side, I would start with this one. We see some legal uncertainty and risk of greenwashing. Jegor already pointed out that we as an LP are reporting under SFDR, and with our investment portfolio being classified as an Article 8 product, we have to disclose some taxonomy information. And the opt-out option is only possible when there's no taxonomy alignment that is getting reported whatsoever. And with the SFDR, we would then, maybe breach that requirement. So that's where we see the legal uncertainty. So that's not an option for us. All right, and the second option, the new template from now on, we see a very short time to update our own consolidation and calculation systems, with also the risk of reduced data availability, meaning there is a very short time for you as a GP, for the external manager, as well as the data providers of liquid asset classes for the implementation and also the data collection. So we ask ourselves, where is the return, where's the benefit? We don't see it, and that's why we decided to go with the option number 1, because as it's obvious, there are no short-term updates necessary, neither regarding the own systems nor the external manager side. And also we see a higher probability of receiving data for alternative asset classes. And with that, we also have more time on our hands to plan a well-planned transition phase into the next template. Alrighty. So what are the next steps? Let's sum it up. For the financial year 25, there are basically no changes for the upcoming reporting. We will still disclose, or we will still use the template 1.0, and we will still use the old taxonomy template that as well for the CSRD. And for the financial year 26, we will then go on with the new templates. So what that means is for you as a GP, if you are an alternative investment manager of our assets, you can still, we will still ask or require the taxonomy data, the GHG emissions, and also the PIs with the EET template. And to give you a last but not least, a quick overview of the timeline. From now on in this year, October 25, we will start mailing the template out soon to our managers. So it's giving you a 3-month period probably to the manager to fill out the template. For us, we then have a deadline in January so that we can consolidate the data for all our assets and calculate the final KPIs. And for that, end of February 26, there is like the deadline for the annual reporting so that we can publish it in March 26. Michael, I see your camera is on, so I guess there's a question.
Exactly. Thank you very much for your insights, Lukas. Indeed, there is one question to you and another question probably for both of you. So first for you or for VOLKSWOHLBUND is this a representative case? How many LPs are looking for the opt-out option based on your Intel? I think it's a typo. Any reduction in reporting requests towards AMs to be expected? So I don't really understand. So it's just probably you answer if it's representative for other insurance companies also. So being not formally in scope, but report voluntarily.
I think it's a pretty individual decision. So I can't really I can't really estimate on how other insurance companies treat the upcoming changes. But for me, it would make sense if some of our fellow insurance companies do the same as we do. Yes.
Well, thank
you.
I
think Michael and Lukas, I think when we were in our working group, where we're developing the template, right, with multiple insurance companies, I think many followed the approach, Lukas, that you also just presented. I think we had some that were typically smaller and also not life insurance companies, meaning not offering products with taxonomy values like Article 8, insurance products, insurance-based, insurance-linked products. And for those investors, so first of all, the scope was, so they would fall under the scope, maybe also not just for 1 year, but for many years. And also taxonomy-wise, they were not really keen to disclose any taxonomy. So I think when those two things come together, then it's actually quite nice to use all the simplifications. But for the others who either want to show taxonomy or obviously are too big, there was no real simplification with that regard.
Thank you. Well, another question goes in the same direction. So let's assume a company isn't subject to CSRD reporting and therefore doesn't have the data for it or the taxonomy. How should this be handled if other actors in the supply chain who are already subject to reporting themselves request data from the smaller company based on a BAI template? Is there a clear recommendation or suggestion for this?
So maybe first one, Lukas, if you don't mind, on the BAI template and company. So the BAI template is made for funds. It's not made for companies in the first place. So you shouldn't generally approach companies and ask them to populate the BAI template. The BAI template is what the GP populates on the fund level and sends to the LP. This is regarding the BAI template as a template. The other thing is how to get the data. Well, in the same way how you were probably and others getting the data in the last 4 years, because majority of private equity, private debt, infra real estate companies didn't have any obligations to disclose GHG emissions, PAI, taxonomy, and so on. So typically through engagement and through typically also own templates or some other templates from other associations on the, let's say, investment level. So Invest Europe has something, for instance, or the ETSI exists as well. So there are all kinds of templates or proprietary templates. You just try to collect this data from companies which are not on scope on the best effort basis, validate, of course, and then basically aggregate on the fund level. Or what do you think, Lukas? I would say this is the typical approach, right?
Yes, correct.
So I would say the base case in private markets is that your target investment doesn't have to deliver anything. And this is why it makes it a bit challenging, but also a bit interesting how to extract this information. But the good news is, because it's been like this already for a couple of years now, there are in many cases processes in place where, well, GPs essentially try to extract the data from their assets and their portfolio companies.
Well, thank you for this answer. There are still some questions coming in. So another person would like to hear Lukas and Jegor's take on two matters. So the first one, do you see flexibility from LPs in terms of data delivery, or are LPs usually very demanding on using exactly their file? So could you work with a slightly different template than the one VOLKSWOHLBUND would circulate to their managers, which is probably the ESG template?
So the question is if we could use another template than the ESG BAI template?
Yes, which is slightly different, not entirely, but slightly different.
Well, yes, I think it would be possible, and we can do some mapping. But for us, it's like we have many different kind of investments. And in order to fulfill, I mean, you can see the timeline right now that we have, and it's estimated about around 2 months at maximum. So for us, it's very important, or it would be very beneficial if there's like one reporting standard that we can decide on, so that we can have like processes and automatic data imports in our systems. And yeah, of course, different templates would work, but it would not be beneficial for us. So that's like the quick answer I can give on that.
If I might add a remark from BAI side, it's exactly the reason behind the development of this ESG template. So standardization will help everyone in the industry. So every difference makes it more complicated. So if ever possible, don't change templates, but sure, you can talk to them. Jegor, you want to add something, or may I ask the next question? So this
I think the point is not just, let's say, mapping. The problem is also that other templates are designed based on different standards. So like if you look at other templates, they typically are designed for something else. They're not specifically designed for, let's say, Article 8 taxonomy DA or for CSRD ESRS. And obviously, if you like, it's same but different, you know, if you look at it. So if you want to have exactly what is designed based on Article 8 taxonomy DA and CSRD ESRS into the BAI ESG template, because if you send something else, it might be that what you input there is not what you need for the other regulation. So even if you spend time and had enough time to map, sometimes you wouldn't be able to map it because it's not one-to-one the same kind of just put this field and put it into that field, right? Because it's also different in the content, and certain data is missing, certain data is calculated in different ways or presented differently. So it's not just the mapping topic and time, it's also the content difference and methodology difference.
Thank you. Well, second part of the question was, given that data availability is notoriously difficult, how lenient would the one VOLKSWOHLBUND how lenient can LP be on data omissions? So it's rather for you, Lukas, but probably with your broader view on other LPs, Jegor might against and add your comments.
So let me get this correct, because sometimes it's hard for me to get the question right. I'm sorry. It's because so there are like questions about coverage and estimations, and how we use
no,
estimation.
it's rather how lenient you might be on data omissions as an LP if data availability is notoriously difficult, as we all know. That's the point of the question.
Sounds like coverage, Lukas. So if you don't get
it,
the GP can get
it. I mean, we already. I hope that these slides showed that it's like a voluntary reporting for us right now, and where we are very keen on receiving data, and we are very happy if we can collect data and use it for our reporting standard. But I mean, it's like not it's not, we are not obliged. We can also estimate data, although it's like very difficult to estimate. So yeah, there are probably some coverage that is, or some missing coverage, and we are fine with that, as long as we can show to the auditor that that we, how should I say, that we did everything that we could, and this is like a it's like a very subjective, broad field, how you can put that. And for the auditor, sometimes it's enough if you just send out the template, and even if you don't receive an answer, maybe it's enough. Sometimes it's like the auditor requires for you to, I don't know, to really like to resend the questionnaire or to ask for coverage. It's fine for us, to make it short, like to put it this way, it's fine for us. And if there's like a missing data, it's okay, but we would be very glad to receive data. Yeah.
Jegor, anything to add?
I guess the less you receive, the more you have to do. So at the end of the day, it's always the question, who does it, LP or GP? Because the LP at the end has to do it, right, Lukas? So you need to, if you don't have it, you need to estimate, or you need to close data gaps in taxonomy to some extent, right? So ideally, if you get everything, you have to do less as an LP. If you get less, you have to do more. And if you do more as an LP, you have to not just kind of calculate more, but you also have to justify more to the auditor. You have to discuss with them, why did you make this assumption? Why did you make that assumption? And this whole thing, obviously, within the short period of time, plus after, also during the audit, obviously. So in this January to, you see, March timeline. So if you want to kind of make Lukas' life easier between January and March, but if you want him to kind of work a bit longer, then you don't send anything. This is essentially then the consequence.
Yeah,
well,
definitely. Life would be easier with.
Sorry.
Yeah, life would be easier with receiving the filled out template. Yeah, that's correct, of course.
I will pick up one last question before we continue with the presentation. So do any of the updated templates allow for GHG emission estimates to be reported and used at scale? And can PCAF score be reflected as indicators of quality, trustworthiness? In other words, what is your view on reporting density, EET, versus a more complete but also heavier estimated picture? With greetings from Bulgaria.
We're getting interesting questions today. All right, Lukas.
Yes. All right.
So let me just look on the design of the template. So design of the template, yes, you can report GHG emissions with PCAF quality scores. That was my understanding of the question. So you can report, you can say if it's estimated or if it's reported, you have the PCAF quality score and you have the GHG emissions scope 1, 2, 3, 1, 2, and 1, 2, 3. And also based on the asset class. So if I understood the question correctly, I think yes, Lukas. I don't know if you have a different view on this.
No, it's fine. Yes, I share the view with you, Jegor. Yes.
Okay, thank you. Then go ahead, Jegor, please.
Yes, thanks. So great. Lukas, thanks for the great presentation here. You see how many questions came as a consequence. Let's see. let's see what else happens until the end of the presentation. So if I can ask maybe Roland or Michael, if you can give me the rights to continue. So what I would done. So we discussed let's say the theory. We discussed the practice from an LP perspective, and now we look at the practice from the GP perspective, because now we need to send Lukas something as a GP based on his, but also other LPs requirements. And this is, so the answer is the BAI ESG template. What did we do? You can see here, we did the same as last year. We spoke to different LPs from Germany and Austria, discussed their requirements, and it was not just let's say their view, because all of them also have typically consultants and auditors, so it was also kind of behind them. We also had a couple of consultants, auditors advising or auditing them. So it was, I would say, quite a good input from the working group. And still, there was, of course, room for interpretation, especially if a complex new regulation comes out. You can interpret it this or that way. Obviously, and also it was not the consensus between everyone. So at the end of the day, the ESG template is basically the kind of best guess of the working group, For some, it might be not sufficient. For others, it may be too much, but it's kind of the average representation of the of this expert group was thinking here. It is already available on the website. I'll show you on the next slide where you can find it, and you can use it for this 2025 reporting for basically both groups of LPs, for the ones who are doing this based on the old, but also on the new template. Next year, we expect a significant change because we are not going to have the old format anymore, but we're going to have a new format. And as I said, the new format is expected to be different. So the template will also change significantly. But this year, we found a way how we can kind of for this year we can find the solution to recycle the old one as much as possible, and ideally map to the new format for those who use it. You can find it here, so you'll get the presentation after the webinar. You can download it here, or you can just follow these steps. You'll find all templates there, all three versions. Please use the oldest available one, which is BAI ESG template 2.0. So you can find it here, as you can see. And now, what has how to populate it? Maybe you want to know, okay, I haven't done this ever, or haven't done this in a year now. We're not going to explain all this now because we've already done this in a couple of webinars. So you can find the previous detailed explanations in the webinars also with other German LPs as well, with LVM and LH. So feel free to have a look here because some of the content topics remain, or majority of the content remains the same also for this year. But what will change? So what will change is we'll have basically the same ESG template as last year, plus 7 new fields. And those 7 new fields were introduced for those investors who will use the new template. So essentially, our understanding is there will be not too many investors who will use the new template this year because the time is just too short and they're still allowed to use the old established process. But for those who really want to do this, they can basically map to the old one to the new one based on the old fields that we already have, plus the extra fields. This mapping is not ideal for them, so it's not perfect, but we thought for the first year it still may do the job, because the alternative would have been we release 2 different templates which are completely different, and the worst case would be the GP has to populate both, and then they will not send anything. So we found kind of a compromise for those who want to use the new template via a very little surgical addition of 7 new fields. What are those fields? Those are denominator fields. So basically other counterparties, that was 1 field before, is now split into liquidity, real estate, and other use of proceeds. So specifically infrastructure projects would fall here, which is great because now you can see what is cash, what is bank deposits, what is real estate objects, and what is infrastructure projects. And then the same basically happens in the numerator, where the split is between real estate and we call it use of proceeds, but basically it's infrastructure projects in our case, based on capex and revenues, and this is basically what it is. So no real revolution here, just a very small evolution for you to fill. Now, as I said, we have 4 different types of LPs now. So what is possible that they request? It can happen that, again, if you have one who is not regulated by taxonomy and CSRD, then you don't need the template. If you have one who only does CSRD, send the template with only CSRD and ESRS fields. So it's going to be quite a nice little subgroup of fields out of all fields. If you have the LP who wants to do CSRD and alt, then you need to fill basically the old, so only the old fields, and don't do the new 7 new fields, or even send the old version. That's also fine, typically. And if you have one who wants CSRD but also the new template, you need to send all fields. So essentially, if you don't know who your LPs or what the LPs will want, you just send the BAI ESG template with everything, and then hopefully all 4 groups will be able to find what they need for their regulatory requirements. Little example, So those are the new fields here in the denominator. So you see this is a real estate fund. So it had, in the past, we would report it as maybe 2% derivatives and 98% other counterparties. So that was a bit of a black box because it had everything here. So now in the new fields, you'll split it into maybe 8% cash and 90 real estate. You know? So this 98 essentially is now has 3 subgroups. So nothing crazy. For infrastructure fund would be the same. It's just this 90% would be here and not in the real estate category. So now you have a dedicated field for real estate and you have a dedicated field for infra. For the private equity, private debt fund here on the right-hand side, we would typically have only 8% other counterparties like cash and other assets. So now they would go straight into here because in a PEPD fund, typically you don't have real estate and infra. So you would just put everything into cash basically in the normal situation. So no, I guess no big change, just a bit of an extra specification. The same for the taxonomy. So for the taxonomy, we have here 4 new fields where there is a split by real estate and again by use of proceeds, so infra. So here you can see in the real estate fund, maybe you had 15% taxonomy alignment. So now you would allocate those 15% taxonomy alignment to the real estate category and 0 to infra. For PEPD, you don't see too much taxonomy alignment there because you're not allowed to report anything unless it comes from a CSRD company disclosing it. So since you don't have too many CSRD companies in the PEPD fund, typically it's 0. So if that is the case for you, you would also just report zeros in the well in the alignment in general, but also in the real estate and infra-specific alignment. So yes, that is the that is essentially the change. We think it's so our clients, our not clients, our members of the working group, they thought it would be a good compromise for this year. Even again, for those who do the new template, it's not ideal, but at least it's a compromise. Next year, this will change. So these templates and these templates, all this will change probably because the Article 8 taxonomy DA will change and extend significantly. Good news though, all the nuclear gas fields, or the majority of them, will be removed, as it seems. So I think this is actually something which will be helpful. Right, and then last but not least, this is the GHG. Those are the GHG slides. I just copy pasted the same as we had in the last webinar last year. So I'm not going to repeat it again. If you're interested, just download or watch the video and the slides from the last year. There is no change here. So as we said, ESRS is still the same as last year with regard to GHG reporting. So we still need PCAF, we still need GHG emissions, and there is no change in this part. And with that, that is our part. Lukas, do you have anything else to add from your end?
Nothing more. I'm fine.
Well, thank you very much, Jegor, and thanks again to Lukas. So we had many questions in between. There are rather remarks in addition that I might tell you. So we had discussed if you might use different templates or slightly change templates before. So there is a remark that it is also difficult to introduce several templates as a data source in a discussion with the auditors. Probably you might see it same way. So then there is a remark and clarification from a fund of fund. So it's a quite long remark. When you fill out the BAI template to our funds to provide to our LPs, we check for CSRD and FRD companies with the fund. Is my assumption correct that we can already apply to 1,000 employees, to the 1,000 employee threshold plus one, or either 50 billion turnover or 25 million balance sheet? If none of the companies fall in scope, we would only provide the reused template.
if I might comment on this, it's a common question by fund of fund managers. The problem is the CSRD is an EU regulation and it's extremely heterogeneously implemented in national laws. So some, as you know, last year it was supposed to be implemented. In Germany, it's still not implemented, but then in some other countries it is implemented. And then some countries implement it this way, others implement that way. So from a fund of fund manager to assess 1,000 portfolio companies and target funds, on their level, I think it's quite difficult, to be honest. So essentially what you need to do, I guess, is to maybe through a filter, identify those that might be in scope, maybe through a conservative filter, but then also to start checking company by company if you find any disclosure on their website. Because typically if you find a disclosure on the website, it means they are subject because they have to disclose. Otherwise, they would be violating the regulation. And if you don't find, typically it's an indication that they're not subject to this. But I think making the, let's say, assumptions on your level would mean that you will do what in 1,000 companies, 1,000 ESG departments and finance departments of those companies are doing based on 27 different national laws, which I guess is a bit difficult, even if you're a very smart fund of fund manager.
Thank you. And one last question to end in time. Could you elaborate the difference between the GHG disclosures in the EET and the BAI ESG template?
Yes, and it's the same GHG. The difference is that in the EET, it is typically based on 4 quarters. So the basis for the calculation is based on 4 quarters. Accounting for also which assets you had at which time. In the BAI, it is based on 1 quarter, on 1 balance sheet date. So you already have, let's say, the financial difference in terms of the reporting. Another point is often the timing. So let's say for the timing of the EET, typically you would send it in March, April, May. But here we heard the BAI you need earlier. So you would have a timing mismatch. If you send an EET in, let's say, May, then Lukas wouldn't get anything in January, I think was the timeline. And the third thing is in the BAI, you have certain additional points that you don't have in the EET, including PCAP and so on. And in EET, you have certain things that you do not have in the BAI, including eligibility coverage ratios, again, which are calculated in a different way based on 4 quarters. So again, it's same but different. It's really the detail which is important here, and the methodology.
Well, thank you again for this. And a very last question. So from a private equity fund of fund, is it right that CSRD criteria only applies to listed companies based in the EU?
So I'm not a CSRD scope expert, and Lukas, correct me if I'm wrong. My understanding is it's not only listed companies, it can be large companies in general. That was one of the big changes when they reached the scope. But based in the EU, I believe is correct, but don't quote me on this. Also look into the national regulation, because every single national regulation might have national specifics. So that is my understanding. So I think it doesn't have to be listed, but it has to be in the EU, but I'm not 100% sure. Unless, Lukas, you have a different view on this.
Yeah, you have the 3 criteria, turnover, employees, and so on, besides the listing or not listing. So you might be in scope nevertheless. Well, thank you very much. Thank you very much, Lukas. Thank you very much, Jegor. Thank you to our audience. So the high number of participants and also registrants that might watch probably later on the recording shows us the importance of this topic of sustainability reporting, and also hopefully the usefulness of our BAI ESG template. So thank you very much. Have a sunny day, and see you next time with another BAI webinar. Bye bye.
Thanks so much, everyone. Have a good one. Bye.
Thank you. Bye.